people can take a little bit of something away from this. If you are skeptical about EVs and Ford's ability, you can say, look, they're going to lose $3 billion. They lost $2.1 billion last year.
In a world racing towards an electric future, one of the America's automotive giants faces an unexpected roadblock. Ford, a pioneer in the automotive industry, with its ambitious drive into the electric vehicle arena, has hit a wall that no one saw coming. Stay tuned to find out. In the USA, about half of all Ford's dealers have decided to stop carrying electric cars by 2024. Additionally, those dealers will not be responsible for any future Blue Oval mandated EV equipment or training costs. Nearly 90% of the nation's population, according to the company, will still reside 20 miles or less from the Ford EV dealer. However, regarding how many of its dealers will sell electric vehicles beginning in 2024, Ford and its dealership relations has been quite erratic. Despite the requirement that dealers provide with at least $500,000 for equipment and training, around 65% of dealers, which is 1,920, had signed up by the end of 2022. For Ford, the EV surge has slowed down throughout the past year. Do you believe that charging electric vehicles is getting expensive? According to our perception, when there is a demand for gasoline-powered vehicles, the price for fuel is high. Since there is a sudden shift towards electric vehicles, we believe that charging the EV batteries are going to be expensive. What are your thoughts on this? Do let us know in the comments. Approximately 1,550 dealers are still registered for the Model E program, and it has been confirmed. Hence, that represents around 50% of all Ford's dealers nationwide. Ford will not recognize anybody who chooses not to enroll or withdraw from the program as Model E certified. So, this implies that they won't have the same tools or expertise on hand to handle the maintenance requirements for electric vehicles. Ford, for its part, doesn't appear overly alarmed with the circumstances. We think our dealerships knows their market best, and EV adoption rates differ across the country. Ford spokesperson Marty Gunsberg told the Detroit Free Press. He added, enrollments for 2024 are slightly over 50% of the network, placing 86% of the population within 20 miles of the Ford dealerships that can sell and service a Ford EV, according to assessments that Ford dealers have completed for their local markets. Ford has also recently trimmed back on its electric vehicle plans, which includes lowering expenditures, reversing its 2024 EV production targets, and closing a battery factory that is now under construction. It'll be interesting to watch which dealerships succeed and which one fails over the following 12 months. Now that all the parties have committed, the rest of us can see how it all works out. Do you think that problems are over for Ford Motors? No, it's not. Ford Motor Company F has lowered its 2024 F-150 Lightning manufacturing goal by half. The carmaker backtracked after greatly boosting its factory capacity for electric vehicles this year due to the decreasing demand. Ford intends to reduce its average weekly production volume at Rogue Electric Vehicle Center in Dearborn, Michigan, to 1,600 vehicles, down from the current production volume of 3,200 trucks, as per a note to a dealer first reported by Automotive News. Owing to waning demand for luxury cars, Ford executive announced during the company's third quarter results call that they intend to postpone or cancel investment totaling around $12 billion in electric vehicles. With regards to EV spending, the firm has already lost over $3.1 billion so far this year and expects to lose $4 billion in total. Ford declared in January 2022 that it would raise its production capacity to 150,000 units annually by mid-2023, following the receipt of 200,000 bookings for the F-150 Lightning. However, in early 2023, the automakers idled its Rogue Electric Vehicle Center in order to meet this manufacturing objective. Because of increased cost and financing rate, the market for EVs has lagged below expectation. Ford has sold 20,365 trucks so far this year, up from 13,258 during the same period in 2022. The automakers' projection for growth in demand are not being met, and as a result, they have had to curtail their investment in electric vehicles. Why do you think that might be the reason for this? Share your thoughts in the comments. In relation to its employees' pension and other post-retirement benefits, Ford Motors opened a new tab and stated that it anticipates recording a pre-tax remeasurement loss of roughly $1.7 billion in its fourth quarter results. Ford estimates that the loss will reduce its net income by about $1.3 billion after taxes. Less than a year ago, the Detroit manufacturer claimed was the reason for the loss. Remeasurement losses are those incurred when businesses reassess the worth of its foreign currency or long-term assets. Ford's statement is made 2 weeks before its own and a week before Detroit competitor General Motors' new tab fourth quarter results. Are you a person who loves to trade in the stock market? Imagine you have been trading for the past few months. You were so excited that you were making consistent profit. Soon, one day, you decided to look at the profit and loss statement. However, the portfolio shocked you as you were in the net loss after tax reduction. What will that be like? Detroit, according to CEO Jim Farley, Ford Motor is reconsidering its plan for electric vehicles, including reassessing the necessity of producing batteries internally. The Detroit manufacturer had previously stated that it intended to postpone or reduce its $12 billion investment in all-electric cars, but recent remarks provide a most in-depth information about how Ford is altering its strategy for EVs. Wholesales are increasing more slowly than anticipated. Farley stated during the automaker's fourth quarter earnings calls, "We're betting on new chemistries and capacity and actually reassessing the virtual integration that we're relying on. This is one of the things we're taking advantage of in taking some timing delays." Farley reiterated the company still believe EVs will grow but noted widespread adoption for mass market consumers won't happen until the costs are more in line with the traditional vehicles. EVs are typically thousands of dollars more expensive than their gas-powered counterparts. He also disclosed the Skunk Works, or Secret, team at Ford has been developing a smaller, low-cost EV platform for the automakers that could be utilized across a range of vehicles. However, he did not say when the first vehicle is expected to launch on the new platform. In addition to re-evaluating its vertically integrated system for producing its batteries through joint venture operations rather than sourcing from a third-party supplier, Ford Chief Financial Officer John Lawler said the company is also considering modifying installed production capacity to match demand and possibly postponing the release of next-generation EVs in order to ensure they meet our criteria for profitability, given a new market reality. The company's Model E electric vehicle division lost $4.7 billion in FY 2023, of which $1.57 billion was lost in the company's fourth quarter of 2023. The losses were offset by earnings from the company's fleet and conventional internal combustion engine businesses. Each of the two companies made more than $7 billion in revenue last year. Lawler stated that it would be necessary for the unit to become independent sooner rather than later. Additionally, he stated that the corporation is abandoning its goal for an 8% margin by 2026 for its electric vehicle unit. By then, the firm has already set its goal of selling 2 million cars a year. Ford plans to increase its sales for hybrid cars, particularly trucks, as it retreats and reassesses its EV business. This year, in 2024, the business anticipates a 40% growth in hybrid sales. In the United States, it sold 133,743 hybrid cars in 2023. Ford seems to be placing a lot of stock on hybrid electric car sales, which it anticipates will increase by 40% by 2024. Ford stated that it is dedicated to EVs and that it anticipates growth for the Model E business in 2024, despite all the electric boom and gloom. Ford CFO Lawler stated, "We are aware that there are competitors in the market. Therefore, we need to make this electric vehicles business successful and stand on its own. We discussed how profitable it is for both Tesla and the Chinese, and we need to get over that fulcrum." Lawler stated that the Model E, Ford's electric vehicle business, is expected to consume about 40% of capital expenditures in the upcoming year, which is largely responsible for the decision. He added, "We're closely examining every dollar and will persist in enhancing efficiencies, with the goal of reaching the lower end of our capital expenditure range." Are we witnessing a fundamental shift in the automotive industry? Drop your thoughts in the comments below. Don't miss out on our next deep dive into the future of the transportation. Hit that subscribe button, ring the notification bells, and join us as we continue to explore the revolution of electric vehicles and beyond. Until next time, keep questioning, keep exploring, and stay ahead of the curve. This isn't just a story of Ford or the EV market. It's the story of our future, and you won't want to miss what comes next.